Most people think that cash is safe. Cash is the least safe investment. It just doesn't have the same volatility to it.
What's up guys, Ben here and welcome to Motivation to Invest. With central banks from around the world printing trillions of dollars in stimulus packages and government debt at an all-time high, many investors are retreating to precious metals such as gold and silver to hedge their portfolio against the risk of paper currency becoming worthless. Ray Dalio, one of the world's greatest investors, even went as far as saying cash is trash.
To think about safety as different. Most people think that cash is safe. Cash is the least safe investment. It just doesn't have the same volatility to it, but it has, because they're producing so much cash, it has a negative real return. It's a tax that maybe 2% a year you lose money in terms of cash.
I recently did a video on should you invest in gold, which turned out to be extremely popular. In the comments of that video, many people were saying, Ben, gold sounds like a great investment, but what about silver? Is it better? Is it worse? So in this video, we're going to find out as I reveal the top 5 differences between gold and silver and which one you should invest in for your portfolio. Let's dive in. Welcome back guys to Motivation to Invest. Before we get started, go ahead and give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more stock investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and be sure to turn that notification bell on. With that being said, let's get into the video. Kicking things off at number 5, the silver price is more volatile. The annual silver supply is around 1 billion ounces, whereas gold only has an annual supply of around 120 million ounces. This makes silver a lot more volatile. Basically, silver is gold on steroids. When gold drops a little bit, silver drops a lot, but when gold moves a little bit up, silver jumps up even higher. Due to the excess supply of silver, you may think that the silver market is 8 times bigger than gold. However, just the opposite of true. Because of their massive difference in price, silver's lower price makes the market value of the annual supply much smaller than gold's. As you can see from this graph, the annual market value of gold is $192.6 billion, whereas the annual market for silver is only $16 billion. At the 2019 prices, the annual gold value was 12 times bigger than silver. Comparing the annual silver supply to many popular stocks, you can see just how small this is. Looking at the market cap in billions, we can see annual silver's 16 billion market cap is much smaller than gold's, Disney, Bank of America, ExxonMobil, and much smaller than Apple Computer, which is now over $1 trillion. This explains why silver is more volatile than gold. We know stocks of smaller companies are more volatile than stocks of larger companies. This is because relatively smaller amounts of money can cause the stock price to move even more. Thus, as an investor, if you decide to invest into silver, you must be emotionally prepared for silver's extreme volatility. If silver plummets massively, you don't want to be the investor selling. Remember, even though the great Warren Buffett doesn't like precious metals, he has a great quote: "Be greedy when others are fearful, and fearful when others are greedy." So when that silver price plummets, don't sell. From this table from goldsilver.com, you can see the highs and lows of gold and silver and how they vary massively. For example, during the 1970s to 1980s, gold rose by over 2,328%, whereas silver rose by even more, over 3,000%. However, on the fall between 2011 and 2016, the gold price dropped by minus 44.6%, whereas silver dropped by over 70%. So you must be prepared for these wild swings in silver prices. The great news about this volatility is silver gives you more gains. Thus, silver is like gold on steroids. you can achieve much higher returns, and it's basically like giving your portfolio a shot of espresso during the start of a bull market. Coming in at number 4, silver is a poor man's gold. Silver is much cheaper than gold and has very similar properties, thus can be used as a great alternative currency should paper currency become worthless. If you look through monetary history, you'll actually find that silver has been used more in coinage than gold. This is because silver is just more practical than gold for everyday purchases. Fair enough if you have some physical gold lying around, if you want to do a big purchase like a house or maybe a car. But for everyday grocery shopping, silver coins seem much more practical. You can buy small denominations of gold coins and bars from ½ ounce all the way down to 1/20th of an ounce. However, the cost for these products of less than 1 ounce increases much more. This is because the refiner for gold charges just as much to produce a 1/10th ounce coin than a 1 ounce coin. Thus, silver offers greater affordability and thus is ideal for investors with smaller budgets. However, there is a major negative, and this brings me on to difference number 3. Silver requires a lot more storage space than gold, as it's a lot less dense. Pure silver is actually 84% larger in volume than pure gold. This means silver takes up as much as 128 times more space than gold for the same dollar value. Here are a few practical examples. You can hold $50,000 worth of gold in just one hand, but it would take about 10 large shoeboxes full to hold the same dollar amount of silver. $50,000 worth of gold weighs just 2.6 pounds, where the same value of silver weighs over 189 pounds. Thus, if you have a small safe deposit box, you could store over $170,000 worth of gold, but only $2,300 worth of silver. This makes it very impractical for storage. So if you try and pay for professional storage for silver, it will cost you much more than gold due to the extra space required. The same extra cost is true for transporting physical silver compared to physical gold. So that's another point for gold, but silver is fighting back. Bringing me on to point number 2, silver has much more industrial uses. For example, only 12% of gold is used for industrial purposes. Compare that to over 56% of silver. Silver is used in many applications, from electronics to medical, batteries and solar panels. It's the most electrically conductive, thermally conducive and reflective. However, because of this, silver prices have more of a cyclical nature, as demand for industrial uses is higher during boom times and lower during recessions. However, unlike gold, most industrial silver is consumed and then thrown away, and in some cases even destroyed during the fabrication process, as it's just not economic to recover every tiny flake or grain of silver compared to what they do for gold. This limits the amount of silver which can return to the market through recycling. Thus, new supply must keep up in order to meet the demand. However, this does give silver an extra lever on supply and demand against gold. For example, we all know during recessions, investors retreat to gold and thus gold prices boom. Silver also has that same property now. However, it also has the industrial side. So when the economy is doing well, silver prices will still be booming. A clear example of this from goldsilver.com is between 1970s and 1980s, where a $100 investment in gold had a 2,328% gain, whereas in silver, 3,105% gain. As even though the industrial demand dropped off during this recessionary period, investors still retreated to silver as a hedge for their portfolio. However, this brings me on to my last difference between gold and silver. Silver stockpiles are actually falling, whereas gold stockpiles are actually rising. Governments and other institutions used to hold large inventories of silver. However, these days, many don't have stockpiles of the precious metal. In fact, the only countries which warehouse silver are the US, India, and Mexico. The global government silver inventories has been plummeting over the past few decades. The primary reason governments don't hold a lot of silver is because it's no longer used in coinage. Silver is used in industry to a much greater degree now. So if future industrial needs rise or the supply chain were interrupted, governments will be ill-equipped to support those needs. In contrast, central banks hold over 34,000 tons of gold in official reserves, and on a net basis they continue buying it each and every year. These ongoing purchases contribute to the overall demand for gold. This source of demand isn't currently present for silver, however it does put the silver market in a precarious position. If the need for physical silver were to suddenly increase, for example due to a monetary crisis, a shortage of industrial supply, or a spike in investment demand, governments will not be able to meet the needs with tiny stockpiles. Thus, if governments started to stockpile silver the same way they stockpile gold, this would cause the silver prices to skyrocket. Overall, investing into gold or silver is a great way to hedge your investment portfolio. Silver is gold on steroids, and with its large industrial uses, has a lot more potential to have greater rewards for investors. However, gold is more stable, more secure, and more valuable. If we reverted back to using silver as a currency, silver is a lot more practical for everyday small value purchases. However, gold is a lot more practical for storage and larger value purchases. To summarize the differences between gold and silver, on Motivation to Invest, I've created a simple acronym. It's called VAS. V is for volatility, I is for industrial uses, A is for affordability, S is for storage, and S again is for stockpiles. You can look at each one of these factors and see which fits you best as an investor. I personally think that if you can handle silver's volatility and want the greater rewards, then an investment in silver is a great option for investors. But for stability, you need at least some gold in your portfolio. So how much precious metals should you have in your portfolio? Well, that is down to your personal preferences. But on this channel, I recommend around 5% is suitable for most investors. You can split that 2.5% silver, 2.5% gold, or 5% silver or 5% gold, or you can go a little bit higher. So how do you invest into gold or silver? Well, instead of storing physical silver in 20 shoeboxes in your house, I recommend investing into gold or silver using an iShares physical gold ETC or an iShares physical silver ETC. The ETC stands for Exchange Traded Commodity, and it basically means that you can buy the physical gold or physical silver owned by the investment firm such as iShares, and you can trade it just like a stock. So when you want to buy more, you can buy more, and when you want to sell more, you can sell. You can invest in these funds using a free trading app such as Trading 212. And if you'd like a free share worth up to £200 or $200, use my special link below and you'll get that when you sign up. So what are your thoughts on gold versus silver? Which is your favorite and what are you invested into? Let me know in the comments below and I'll join in the discussion. And if you appreciate the hard work that has gone into compiling this video, then go ahead and give it a big thumbs up. And if you want more motivational videos and investment tips, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Peace.